Good morning. It is February the 13th, 2017, and what a delightful weekend we had here. Saturday, it was, I think, 77 or 78. Really enjoyed being out of doors. The Newfies suffered. They didn't like that kind of temperature, but I did, so pretty good for me, not so good for the dogs. Hope you all had a great weekend, too. We're back to normal-like temperatures here for the early part of the week, so it's still winter if you look at the calendar. We'll start with a customary disclaimer. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Okay, Friday's rally in equities carried over. The United States equity markets and financial markets lead. And so every equity market in the world is up. And our market this morning is pointed higher too. Contract has made new highs. I don't see any reason to trade from the short side. Not saying it can't sell, but I think all the money's long and awaiting Trump's tax and industrial policy program announcements. The weekend meeting with Abe, nothing came out of it. No announcements were made other than light generalities. And I'm for him, he's for me. That was taken as positive. No trade restrictions, no sanctions. No saber rattling, anything like that. Business as usual. Buy stocks. So that's where we find ourselves this morning. If equities rally, I imagine treasuries will sell. So my guess is that the first trade this morning in treasuries will be from the short side. So 24.19, 24.23, sell one. Would like to get it done at 23, obviously. 27 to 31, sell two. On the buy side, 9 to 13. I think we can go a little bit lower. That doesn't mean we will. Put a question mark at 17. And 1 to 5, buy 2. Two more weeks, we'll start March Madness, where everybody goes nuts over the bracket, and that probably is the hardest tournament to win. You got to be hot, and you have to be hot through more than one game, and it brings a lot of excitement to those that have been cooped up all winter with spring rapidly approaching. So that's the next big sporting event we have to look forward to. Okay, looking at the 30-year, 20 to 24, number one. So 27.31, sell one. 3 to 7, sell two. We'll make 4 to 8 or 8 to 12. Let's make 4 to 8, number one. So 29 to 01, buy 1. 17 to 21, buy 2. Market is pointed lower off of stock market strength. I think we'll probably have stock market strength today. So I do think there is one short in treasuries. Gold is lower. Lots of articles out over the weekend about the coming Trump rally and why it's going to have legs, and that's the start of a new renaissance in industrial manufacturing production in the United States. I mean, on paper it certainly could be, but I mean, we don't know if that'll happen or not. So gold is pointed lower. Inflation news is the one factor that could take gold higher if treasuries sell. So 33.35, sell 1. 38 to 40, sell 2. On the buy side, 25.27, buy 1. 20.22, buy 2. Currencies were split when I looked at them early this morning. Euro had come off of its low a little bit. It was down, the yen was up. So the dollar is mixed overseas, and the reason the yen was up was because of the nothing bad came out of the Abe-Trump meetings. So here we are. We've got a seller against 50. So 50 to 60, sell 1. 75 to 85, sell 2. On the buy side, 106.25, pretty much where we were this past weekend. Coming into the weekend, buy 2 at 106 even. Okay, crude, the IEA report out over the weekend, I think it was on Friday, if memory serves me correctly too, we've got our first peek at it, is being cited as the reason for the strength in crude. The biggest thing out of that report is that 90% of the OPEC members were adhering to quotas. Now, if the 10% of the OPEC members that are not adhering to quotas would happen to be Saudi Arabia, the largest producers, that would, the headline in and of itself needs to be taken with a grain of salt, but Libya and Nigeria are exempted from the deal. Iran reluctantly agreed to a 3.77 million quota. They're producing over 4 million. Announced that their February production would be over 4 million. One of the sticks out there that might make it supportive is what might the United States do sanction-wise on Iran to make it tougher for them to sell oil. That could be somewhat supportive, and that could be a factor right now. The attractor down here is at 53.17. Market was sold in London. So I got a pretty clean break up here at 53.75, 54, sell 1, 54 and a quarter, 54.50, sell 2. On the buy side, we'll play 53, 53 and a quarter. Expect less range, less volatility, and then 52.50, 52.75. Fundamentals say it should be sold. And that's why they're called fundamentals by many. Eventually, fundamentals do play. But again, as with everything in our game, it's timing. Never know exactly when that's going to be. Okay, the E-mini is pointed higher. All the factors that were there on Friday are still there. Abi's visit, nothing bad came out of that. So, market is pointed higher. Probably the cleanest break in the market right now is in this 2308 area, right there, 2309. See that last rotate down on Friday, stopped at 9. They got stops below 10. So 8 to 10 is pretty stout support. The next place we might find support is you have this L period low, which would be 12 to 14. So I put buy 1 at 15 to 13 because they do make us pay up. And then buy 2 is 9 to 11 in the 9 to 11 area. Obviously has more appeal. Okay, I don't really like the short side of the market. I don't see a reason to get short, but obviously we've got resistance at 18 to 20. So selling failure, they can't get through it this morning. We can get short in anticipation of a test of 23.10. Then the second sell would be 26, but we haven't really been interested in the short side of the market since November the 9th. We have had some short trade, some sell recommendations in there, but everything is pointed higher. And those of you that do play calls, you're in the 23.25s or 23.50s if you didn't want to spend the money. And if we do happen to hit 23.25, roll those, take profits on those calls and roll them to the 23.50s. And on that option play, the last option you buy is going to be a loser. No way to get around that. Okay, it's going to take a bit to get stuff up and published. I'm going to get busy on that. I will be back with you as soon as possible.